we'll connect with Jonathan Barratt, Chief Investment Officer with Probis Securities, to get a take on where crude prices are headed and where essentially global markets are headed. Jonathan, good morning. Thank you for joining us. Jonathan, a month ago it appeared that there was shortage of crude in the world. Now suddenly there is excess crude in the world. If I look at historical patterns, what we've learned in textbook is that crude prices, they normally tend to firm up ahead of winter season. But winter season has just about started and crude prices have completely collapsed. So who's getting it wrong? Who's getting it right?
That's a very interesting question. I think, that's a very volatile market, there's no doubt about it. But I think the dynamics of the market at play, are either suggesting, that the economies are softer, therefore demand is not there, that spare capacity is there as well. That's what the market's telling us. At a time when, we have the US sanctions on Iran, I think the market's now sitting out saying, well, what will the US actually do now the sanctions are there? What do the waivers actually mean? And when will exports, stop from Iran? And I think that's what the market's trying to ask itself. When is 0-0? And it's only then when we start to feel the effects that we either have capacity or we don't have capacity.
By when do you see Venezuela and Libya supplies starting to come back into the market?
That's a key question as well, because when you look at the outages that we have around the world, they're sort of suggesting that we could potentially have that supply tightness, but we don't actually have it. So, when you see that we've had all at a 17% correction in the oil market just over the October period, the market's saying, well, look, what are the key factors now that are going to help determine whether prices will go higher or lower from here? And I think when you look at the outages, I think the market has placated these because we're seeing such an aggressive move to the downside. So, let's have to wait and see. I think the balance of the direction of crude will lay really in the words that we get out of the US and Trump pretty much in the next 24 hours. And I feel they're going to be quite critical as to the near-term direction.
But given, Jonathan, the kind of cool-off that we've seen, the fact that you're sitting at a significantly low level than where we were at just about a month back, what is it that you're seeing in terms of positioning on crude now? Are global funds unwinding their long positions in crude?
Yes, they have. I mean, that started probably about a week, 2 weeks ago. There's obviously, a softening of that approach where the market said, well, look, is there enough capacity? What is the global economic outlook feeling at the moment? And I think the people or general investors are saying, well, look, if the economics are going to be softer, demand will be softer, therefore prices shouldn't be at these levels. Given also that what we thought were heavier sanctions, in terms of the strictness of the sanctions, have been waived by the US, the market's also gauging, well, is the US taking a hardline approach or a soft approach or a more realistic approach? So I think given that we've got a benchmark today with the sanctions in play, I think it'll be really up to where we see the US position themselves as to the severity of the sanctions and how long these waivers will be in play for, because only up until then will we be able to test the capacity in the market.
Thanks, Jonathan, for giving us that perspective on crude oil. And clearly, it's going to be all eyes on those US sanctions that is going to be cleanly watched out for.